We have a core PCE year on year coming in 1.8%, so bang in line with estimates, but you did have March revised slightly lower by 0.1%. Personal income coming in bang in line at 0.3%, but personal spending much higher, 0.6%, and March was revised higher, which was interesting because in the Beige Book yesterday, the Fed cited some softer consumer demand. So the big takeaway, it seems, that inflation steady as she goes, core actually up to 0.2%, so sequentially flat. But personal spending, kind of the big story here. Catherine Mann of Citigroup, still with us. Give us your take on this number, these numbers.
So the inflation number is consistent with what we have in mind, and it means that the Federal Reserve has plenty of room to maneuver with regard to making a decision about June or maybe delay. We have 3 for total for the year, and so there's a lot of the year left. On the spending data, the thing that I would want to look at very carefully, the headline is looking very good. Mm-hmm. We thought that some was going to come back from the winter quarter, the weather quarter, and so forth. But I think another ingredient is looking at the non-gas component of consumer spending, because, of course, gas has been higher priced, and that does show up in the consumer spending data. So I would like to see a little bit inside the weeds before making a judgment about that.
And I should point out that with this information, compensation, though, was up 0.3% in April. The savings rate also ticking lower, but up by 2.8%. So what does all this wind up meaning for your take on the jobs number tomorrow? Where are we?
Well, the jobs number are probably going to come in pretty strong. What we're looking for is wages.
Yeah.
That's the key ingredient. There are a lot of jobs. There's, 1-to-1 in terms of openings to availabilities. We think that the market labor force could grow a little bit faster as people come in from off of disability and coming back into the marketplace. But in terms of the tightness of the labor market, what we're waiting for is to see it in wages.
And I should quickly point out that the Commerce Department said that spending for gasoline and other energy goods and utilities were actually the contributors to the monthly increase in real spending, to your point, more transitionary.